All right, low Russia here. While Wall Street was asleep, the market in Seoul just sent a shockwave. So let's get right to it. The Answer First protocol. A massive capital evacuation is officially underway. The easy money in the AI hardware trade is over.
Just look at this number. Over 7%. The Korean KOSDAQ didn't just rally, it absolutely exploded. But this wasn't some broad, everything is awesome kind of day. No. The real kicker is that the main KOSPI index, the one packed with all the semiconductor heavyweights, it actually went down. That massive split, that insane divergence, that is the signal.
So what's really happening here? It's a fundamental shift, a huge tug of war for capital. Money is fleeing the upstream, the companies building the AI grid, the chip makers. And it's flooding, absolutely flooding into the downstream, the companies that are going to use all that infrastructure, like robotics and software.
Let's be perfectly clear. This was not a risk-on rally. The smart money completely ignored the headline numbers. What we saw was a targeted, surgical, and honestly, an extreme form of sector rotation. It's a powerful hidden signal, like a flare in the dark, telling us exactly where the next phase of growth is about to ignite. Now take a look here, because at first glance you might just see a lot of green and think, hey, good day. But that's the deception. The real story is in the intensity of that green. See the big hardware names? They're kind of pale, barely up. But then you see those pockets of almost radioactive glowing green? Those are the downstream application nodes, the software, the robotics. Capital didn't just move there, it stampeded. And this quote it nails the entire concept, doesn't it? For the last 2 years, all the money, all the hype was about building the AI grid. Think Nvidia, think HBM memory. The signal from Seoul is screaming that this phase is maturing. The next, and maybe even more profitable phase of actually using that grid is just getting started.
So the big question is, why is this happening right now? This isn't random. It's actually a predictable, classic part of every tech cycle we've ever seen. Let's dig into the core mechanics. The key term you need to know is upstream saturation. Think about it. In the beginning, there's a huge shortage of critical hardware, like HBM chips, right? So the makers, like SK Hynix, have incredible pricing power. They can charge whatever they want. But eventually, supply always catches up to demand. And that's the saturation point. Suddenly, their pricing power evaporates, their margins get squeezed, and all that investor capital starts looking for the next big thing. And if this all sounds familiar, well, it should. We've seen this movie before. Just rewind to the dot-com bubble. Companies like Cisco spent billions building the grid. They peaked and then crashed when there was too much supply. But who rose from those ashes? Google, Amazon. They built their entire empires on the back of all that now cheap and abundant infrastructure. History isn't just rhyming here, it's shouting. Okay, so that's the theory, but where is the hard evidence, the canary in the coal mine? Well, we find it exactly where we always look, very deep in the Korean supply chain data. This is the smoking gun that proves the entire thesis. And here it is, the signal activating in real time. On the left, you've got SK Hynix, a key upstream hardware supplier, dropping over 4% on absolutely no news. That is upstream saturation in action. On the right, a downstream user of AI, a robotics firm, rocketing up almost 26%. This isn't a subtle shift, folks. This is a capital evacuation. Money is fleeing hardware and desperately hunting for leverage in applications. And here is the expert-level detail that the mainstream media is going to completely miss. The Korean currency, the won, it actually got weaker against the US dollar. Now, why does that matter? It's everything. It means this wasn't new foreign money flooding into the market. This was a domestic liquidity rotation. Local smart money aggressively pulling cash out of one pocket and stuffing it into another. And let me tell you, these internal shifts are often the first tremors you feel before the big global earthquake. Okay, so a wild session in Seoul is one thing, but what does it mean for the US Open tonight? For you? Let's bridge that signal right now and translate it into a clear, actionable game plan. The translation is direct. We now view the entire US semiconductor space, think the SOXX ETF, as a source of funds. It's the bank, and that capital has to go somewhere. It's now hunting for its next home, in downstream leaders, in software, in companies like Palantir. The hardware supercycle isn't dead, but it is pausing. The application cycle, however, is just getting started. And get this,
This isn't just a theory from Asia. We just got direct confirmation right here from US data. Durable goods orders just hit the wire. The expectation was around 3.7%. It came in at a massive 6.8%. That tells us US companies are already spending big on the exact automation and robotics that will use this AI infrastructure. The thesis is now confirmed on both sides of the Pacific. All right, enough theory. Let's shift to execution. Here's the tactical brief for the US Open. No fluff, just the playbook.
Okay, here's your tactical map. The key pivot on the Nasdaq 100 is 25,550. Above that level, the rotation thesis is a go. Look for strength in downstream names. For hardware stocks like Micron, you're watching for weakness at the open. If they are the source of funds, you do not want to be buying that dip. Most importantly, your risk level, your line in the sand, is Nasdaq below 25,350. If we breach that, this whole thing could be a bull trap. At that point, you move to caution.
So here's your focus list for tonight. We're watching Palantir for AI operations, ServiceNow for enterprise software, Tesla as a proxy for the whole robotics story, and the IWM for that broader growth exposure. These are the assets directly in the path of the downstream rotation. So the final takeaway is this. The signal from SEOUL was unambiguous. The easy money phase in hardware is over, and the AI cycle has officially pivoted to applications. The only question you need to ask yourself is, has your portfolio pivoted with it?